On the call this morning, U.S. markets look to rebound with the S&P up 0.5% as rating agencies reaffirm the U.S.'s AAA credit rating pending future deficit reductions, with Moody's and Standard & Poor's, though, keeping their outlook negative. Overseas markets continue to plunge despite an unexpected rate hike from the Swiss central bank, causing the safe haven Swiss franc to tumble 3%. And gold hits another all-time high on fears that a potential global economic slowdown will make it harder for governments to grow their way out of debt. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, it was a pretty painful day on Tuesday, right? I mean, we had the S&P saw the race gains for the year, biggest one-day loss in a year. We also saw, consumer spending slow to the lowest level in 2 years. I mean, lots of grim data, lots of painful things for the market. We are seeing a bit of a bounce this morning. So how do you handle that?
Well, first things first, the title of our article yesterday was Cash is King, which is what we try and get people to do or to raise when you're in a market correction. So then when days like yesterday happen, when you're down 250 points, you're not rushing to jump off a cliff.
Right.
You're actually saying, okay, I'm glad I followed my rules. I'm glad I saw that we put the market in correction last Thursday when the technicals started adding up. And at this point, you start to look for a reversal type pattern that might not happen today, might not happen for a few weeks, but you need to know what that pattern is in order to get back involved.
And then you were saying once we do see some kind of reversal, it's about, a 2 to 7 day window that you have to watch out for after that?
Well, what you need to look for is a reversal day on heavy volume. That's considered day 1. And then day 4 to day 7, you look for an up day on heavy volume, up over 1.2%. And that gives you a new compilation for a rally, and that gives you the right to go out and buy some stocks and put them together, the best acting ones. We're not there yet. We're in market correction, but there are trades along the way. So you were saying the Dow futures are up like 40 handles.
Right. So it's, compared to Monday, it's pretty much nothing, right? I'm very skeptical that we'll hold this level at all. So how would you be managing this bounce and looking for the trade?
So as a trader, what I would look for is there are levels on the chart that I want to show you. So first, take a look at the chart of the spiders. You will see, this head and shoulders pattern that we've been talking about for a few days now that actually is starting to trigger in other ETFs, which we'll show you later. So yesterday was the final little break of this last, line of defense, so to speak, before the Japanese crisis low. What I'm going to do is I'm going to use yesterday's low of 125.49 and the Japanese crisis low as my pivot point. We're up a little bit. Few things could happen. If you come back to us, you'll know that one, what they try and do sometimes is the sellers come back. So if the sellers come in and they push us through yesterday's low and the Japanese crisis low, there are a lot of stops there. A lot of people saying, that's my out. If we break that, that's the last line. And what that'll do is it'll accelerate a down move, get people out of their stock, and then sometimes a little later in the day, you start to see some relative strength. We come back above that level, which would create a reversal tail, hopefully on some volume. That's how you get a day 1, and that's how you could trade an oversold bounce, because then what you do is you buy that level, you put a stop at today's low, and then you work off some of the oversold condition. But that's only a trade. That's really only for the professionals. Right.
So then in terms of a longer-term investor, then we mentioned cash is king. If we do hit that level Japanese low and then create a new low, do you want to be looking for longs, or you just literally can't touch this yet?
Well, it depends on your risk tolerance. It depends on what you're looking to get out of the market. I do think that if we get a decisive close below this level, I want to show you some bigger levels on the chart and the measured move of this pattern. If you look here in the spiders again, this 122 is a level that I was looking at back from last December. If you take a macro view here, you will see that this level comes in back from December. And then you go to this lower level, which is the gap that started way back when that initial rally. And then you have this 1180. Okay, I want to show you real quickly 1180 because this is where the measured move really takes you to in the spiders. Okay, what you do is how you measure a move is a distance from the head to the neckline. Okay, and the head just say 135. The neckline is around 125. You take it down 10 points. It actually goes to about 115. But we'll see if 118 stops it along the way, which is 1180. Everyone measures it a little bit different. So the overall pattern is measuring a move if it follows through all the way to about 1180 with a macro stop at 1220.
Really quick before we go to Sector Spotlight, I just want to see, are you factoring in your thesis at all for the long term, the possibility of a double dip? I was hearing a lot of economists today say, hey, you know what, it's 50-50 at this point. If you look at the yield curve, it's not pricing in some kind of disaster, but it is pricing in a lot of concern.
Well, right now with all the news out there, we could easily be in a double dip. I think the market sometimes wants to view it as half full, sometimes half empty. Right now, everything is half empty. You know what? Once we get to 1220, we'll see what the headlines look like, and if we continue lower, all of a sudden we could be going into Jackson Hole, at the end of August, and then we'll see what type of support talk we have. Because right now, what I've been trying to tell everyone is QE2 is over. That means that price, the plunge protection team, the wizard behind the curtain is no longer supporting this market.
And
that means
run
we
out of tools.
Yes, and he's run out of tools, and that means we could have days like yesterday where we close on the lows. We've closed on the lows twice in the last week, something that rarely happened over the course of the last year. So everyone has to realize the composure change. All
right, really quick, let's go to our sector spotlight. We're just going to breeze through these and see if there's any glass half full here, right? So let's start with the industrials, the XLI. I mean, it led the entire market lower yesterday, have been getting beaten up so much, but I'm hearing a lot of statements about oversold conditions, a lot of analysts trying to look to buy certain names. What's the chart saying?
Well, this is important because this shows you a head and shoulders pattern that is working and is paying the shorts with follow-through. So if you look at the XLI, you will see this actually triggered and worked. Look at this pattern here. Left shoulder, head, right shoulder, obviously looks kind of the same. Broke this neckline, and look where it went to. That's a big move. That paid some shorts, and that, if people got out right around here on this wedge, they did fine. We're at the measured move. I was talking about hopefully they covered their shorts yesterday. It really goes down to here. Sometimes what you do is you see a move back to retest the neckline, which gives people a way out or people a way in short, considering look where it came from. So this is a pattern that actually worked to the downside, which hasn't worked in such a long time.
Right. All right. Let's go to the home builders, the XHB. So, what's interesting is that construction spending grew slightly in June, which was kind of a positive, but only because of private non-residential construction. So I don't know how supportive that is for the long-term economy there. All right. Tell me the chart on this one and how's it acting.
This also, they all look similar. It's crazy. Another head and shoulders top that triggered, that paid people who played this strategy. You look at the XHB, you will see very similar. Oh my goodness, look what we got here. Another head and shoulders pattern that triggered through the neckline and reached, pretty much its measured move as well. And that's why I'm trying to get everyone cautious on the spiders, because why can't that happen?
Right.
Look what happens when it goes, it accelerates. And that's a nice pattern that makes sense to technicians.
And what about the semis? Are they worse than these charts?
The semis hasn't been as extreme, but it too looks pretty similar, and it has some more room to the downside. Look how it is under the neckline, heading lower. Maybe you see a little bit of a retest back at the neckline if we get an oversold bounce, but then you have to watch that area because that area could be a place to short again for a move lower. And look at the size of this head to the neckline. That's not even close to where this move is measured to.
I just really want to check in on the retail real fast. RTH, we talked about that the other day. Is that holding up any better?
Last I looked, it was not, and if you look at it right now, you will see that it broke its 200-day moving average. Not the same type of pattern, but it's at support.
Okay.
This will be a very important area to watch right around here to see if it could actually contain this down move. You have about 104, and then you have that
Gotcha.
Japanese area around 102.
All right, let's go to the Qs. Let's go to the Qs. They were holding up pretty well. How about now?
The Qs are coming into the 200-day. Technology has been the place to be for relative strength, but they play catch up really quick. That's why we tried to show you some signs that you have like a line in the sand to get out. And last time we looked at the Qs together, I showed you this ascending, I showed you this ascending channel right here, the ascending channel that broke right here to the downside. This took that momentum trade off the table. So if you were trading for more of momentum, this was your last exit, to get out of a core, and now we're coming into the 200-day. Let's see if it tries to hold it the first time, because usually the 200-day holds the first time, like we saw in the S&Ps early in the week, but then once it hits it a few times, it just slices right through as well.
Let's take a look at a trade that actually is working. I swear there is one, but first we're going to actually take a look back at a very bullish call that Scott made on CNBC and how it's actually panned out. Take a listen.
Hey Mark, I have something for you for next year. Okay, watch gold. Okay, I'm making a bold call on gold that I think it goes over 1,500 an ounce next year.
You're gonna cry.
On 1,500 an ounce.
1,500 an ounce.
Yes.
There you go. You got a lot of heat for that call, Scott. So we want to go to gold because we're at 1675 is an intraday high. My gut is that we're going to see some kind of pullback at some point because we're really overbought. But then again, I mean, if people are really scared, they have nowhere else to go, and we could see 1,700.
Well, That was in 2008 of 1,500. This year's thesis was 1,1800, above 2,000 if things get really crazy. Last time we spoke, I think it was trading around 1,600. That was the first time I'm like, you could actually still buy it here. And I was actually buying it just in case a deal didn't get done. But a deal got done, and it still worked.
Yeah.
So it's like gold is working for any which way, which gets me a little bit more conservative, that you have to take some profits into the emotion. If you look at the chart of the GLD, you will see that we just started to extend yesterday, okay, and we're opening up today. This is not a bad area considering we're away from all these moving averages to sell some. We have calculated entries. This was one of the core entries earlier in the year when we took out those previous highs back in April. And then this was another entry, in July when we took out this previous high, and now we're extended, opening higher. Take some off the table, but make sure you hold some, especially if you have a portfolio for the longer term. We've been talking about 10% in gold no matter what. And
not to mention the fact that we're heading into a very seasonally strong buying period that starts in late August that goes through the whole fall. So you definitely want to be on board with that if you want to be on the gold trade.
Yeah, because sometimes you have these blow-off type moves. So this could be the beginning of one, but I would still rather you take some in, take some off, and hold some just so you could trade it and feel good about taking profits into extensions.
All right, and we will be back with some fast ways to make some cash right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
Let's get in the trenches with some shorts. That sounds pretty funny, Scott, I got to say. But you outlined some shorts last week, and I want to see if they're still working. All of them are in tech, by the way. This is sort of the have-nots of tech. Let's go to Novelis, down almost 3.5% on Tuesday. Is there more to short here?
Well, we just showed you the SMHs getting weaker. This reported bad earnings. If you look at the chart, you will see this was that gap down, okay, the wide range bar, the retest. This was your area to short. This was your breakdown area. I still think this has more downside, probably to around 28.
And same question for NetApp.
Oh, NetApp, this also has been really weak. We talked about this as well. Shows you how stocks under the moving averages, continue to accelerate. So if you look here, it's coming into a pretty big level. At this point, I would say, cover your shorts. The last time, it broke down, we talked about it right here. So you're probably in some profits. I would take some, even though it can go further to the downside.
And what about Riverbed? It's still about 11, 12 bucks off from its 52-week lows. So maybe more downside there?
Yes, this has been the have-nots in the cloud computing area. Even the strong cloud computing stocks are under pressure right now, so the weaker ones should have some more downside.
And what about RIM? We are hearing that they're going to unveil their new BlackBerry, so that could be a catalyst one way or the other, right? But it's at its 52-week low, so what do you do?
RIM to me will be sub 20 bucks at some point. We talked about shorting it a week or two ago. If you look at the pattern here, you will see both of those entries. We talked about, oh wow, RIM's been under pressure for so long. Let me make it a little bit bigger so you could see it. But basically, it's at lows. Stocks that are 52 lows tend to go lower. Okay. This was your entry that I would have liked you to do right when it broke here. And then as it started to accelerate, recently. But RIM to me is an avoid. When we get below 20, that's when you're probably going to start hearing the takeover talk. Okay. So that might be when it's a value play, but I don't think until it gets below 20.
But you wouldn't be shorting right here anymore.
I would say you can be if you want to,
be nimble,
wring the juice out of it. But it has lower prices. But a lot of the shorts have already made a ton of money in
RIM. All right, let's go to the quick ways to make some cash. We're going to hit on Apple. Finally had that down day yesterday, trading around 388, well off that $400 mark. How you trading?
I'm going to watch yesterday's low. Apple had a big down day. I think people are getting scared to hold anything. It broke its 10-day. It's up $2. It might even be a decent short to go from positive to negative through that low. Use that low as a pivot because it could retest, this earnings area or maybe even partially fill it. Doesn't, it can actually get to this 20-day as well, and look where it came from. So 377, if this market gets more pressure, it could happen. So there could be a cute little short if it breaks this upper zone.
It's a very nimble trade, though. So if
Yes.
you're a long-term investor, you just got to wait it out for some kind of bottom.
Yeah,
then.
I think that if you're in it and you don't want to sell it and you have a few
hang
year
tight.
time, yeah, hang tight there.
All right, let's go to VMware, and then I also want to hit on EMC because since EMC owns about 80% of VMware, what are you doing with this? I know the chart's kind of having a tough time.
VMware was sold on earnings. It had a big move into earnings. They sold it down. That was a sell signal. I still think there's more pressure there. I'd watch the 50-day.
It's the same for EMC, though? You want to watch for the pressure?
Let's take a quick look at EMC. EMC, this looks like everything else out there, actually.
Yeah,
It looks
okay.
like, breaking through support at the 200-day. Hopefully, you sold some as it broke this upper area right around here. Now it's, a little bit late to be a seller here.
Okay, and then let's go to Baidu and Amazon because we talked about them the last couple days as being part of the tech leaders, but they're both having a really hard time. They both sold off yesterday.
Well, we talked about the line in the sand
Yeah.
on these strong stocks, and yesterday I showed you Amazon. I said if it gets below that 220, it's technically getting weaker. And if you take a look at Amazon, it got hurt yesterday. This, broke that upper area. That shows you that you have to be quick and nimble, even with the best stocks. We're coming into a bigger support. I would watch yesterday's low of about 211.30. If it breaks this, it could easily see 206.
All right, let's go to Las Vegas Sands, wrap this up because it's one of your favorite trades here, but it's just been having a hard time finding any kind of support.
It had great earnings. It had a nice move. It was a great strategy into earnings. And once the market got pressured, I think yesterday I sold the last of mine because I just don't want to be long anything on a macro level more than just a trade in this pressured environment.
And pressured environment, let's just wrap it up here talking about how you're going to position yourself ahead of the jobs number. I mean, briefing.com estimates are pretty grim. Payroll's adding about 50,000 jobs, private only adding 75,000 jobs, employment rate rising to 9.3%. And that's not because more people are in the job force because they feel better about the economy. So is it already priced in, and how would you be positioning for some kind of reversal then on Friday?
Well, it depends. Today is Wednesday. We have ADP today. We have more jobs data on Thursday.
Services
If we
data.
continue to be, if we're in like day 10 of this down move going into Friday, maybe I'll play for a priced-in reversal, but right now we're not there yet, and we're a little bit up today. If we, bounce 2 or 3 days into Friday, the number better be decent because then it won't be. So there'll be a dynamic to show here, just not today because, Friday's a long way away. I feel like 10 o'clock's a long way away today.
No, absolutely. And definitely watch that services number today because, like 90% of all the jobs come from services. So
Yes.
definitely key in to that. All right, that's it. That's a lot to take in. So happy trading, everybody. I'm Alex Steele from The Street.
All I want to leave you with is expect the unexpected and stay out of harm's way and just do what you could handle. Make sure to follow us on the virtual trading floor in the chat room, and I'll see you at the recap. Have a great day.